Okay. Good morning and welcome, guys. It is Monday, beautiful 14th of November. This is Plan for Breakfast. I'm your host, Dane. So, guys, let me know in the comments in the chat where in the world you are joining us from. I can see a ton of people already are with us. Just a massive morning to every single one of you. I trust you guys have had an amazing weekend, and as we saw last week, it was a very powerful week. We're hoping to redo the same thing over, better, stronger, more pips, more dollars, all the way around. Now, I'm a little bit stressed this morning because we do have a brand new studio setup completely from start to finish. Sound, equipment, everything, you name it, is all pretty much brand new today. So obviously we're making sure that everything goes off without a hitch. We've also improved some of your most favorite views that you guys have voted on, and I suppose the favorite view is obviously still going to be this side view. So in a more in a way that we can engage with you a little bit more often, and obviously just something quicker that we can switch to, and we can have a decent amount of fun together as we analyze and get into the market. So we are going to start off with some news. We have a fairly big week ahead of us, more on the price action perspective than on the fundamental data points. Let me know audio quality, how everything is coming through, if you guys are seeing me nice and clear. And as always, if you're watching on desktop, just make sure you select the 1080p full HD version. You can go ahead and select that little cog somewhere down on the bottom left or right hand side of your screen and just select quality to 1080p. You should be seeing me in HD 60 frames a second. So just a quick shout out to everybody that is joining us in the house. You can see here, Waylon, I can see Lucky, Tamim, Zane, I can see Tyler, I can see Peter van Beek, and Sumi Beloy, Waisa, Chad, Adrian, Lana, Garrett, welcome, Zaid, Peter Puri, let's see, Zaid again, might be different Zaid, Ash Mohammed, welcome, Michael Weber, Lucky, Optimal, DJX, Ruan, Clausen, Kenny, Leonie, let's see who else, Colin, Chad, Peter, Wafik, Medistation, as always, Reith Witherspoon, Nakim, and a ton of you guys in the house this morning. So just a massive welcome. Again, I trust you guys have had an amazing weekend. You've got in some rest. I've been hard at work on the new studio, the new setup. So it's a little bit stressful. All new audio profiles, all new streaming setups, all new equipment. And obviously, we just want to make sure that the shows go off without a hitch. So if you see anything, please feel free to comment and let me know if you see anything broken or changed. But the biggest improvement we've made to the show is this new timeline here that you're seeing on the left-hand side of your screen. So no longer do we have a clock, but ultimately we can skip through and open up the sections of the show that we're going to jump into. For those extended trading sessions, we can open up, news analysis. We can get into some of the fundamental data points. We can get into some of the analysis of the different instruments, and then again we can jump into live trading. That's pretty brilliant because we can switch from live trading back into news, so on and so forth. So we're going to have a ton of fun with the studio this week. Again, we're going to be bringing the heat. There's a lot of changes coming, and some of these changes are being implemented now to obviously embody the bigger vision of where it is that we are going. Okay, beautiful. So we are going to jump in, and first and foremost, we're going to have a look at what is happening in the world today from a news perspective. So let's jump straight into the news and let's have a look at what is happening in the world today. So we are going to be starting on a local front as always. And first things first is that we have some renewable energy experts saying that this load shedding issue is not going away anytime soon. So if you're hoping and praying for load shedding to pretty much disappear, it's not going to be happening anytime soon. Looking at the pound to euro, there is a little bit of a forecast this week in terms of what the pound and the euro are going to do, but I think the main focus is still going to be on the dollar. I don't think the pound and the euro are going to be as big of important players. However, we do have some big fundamental data points that are going to come into play this week that we can use to our advantage. I'm going to go through those in a second from now. Down in the description below, I have linked an article that I'd like you guys to go through this morning. And that's essentially the title being Euphoria Meets Retail and What to Know This Week, right? And that article really just goes ahead and breaks down what are the important points that we need to know as traders and what are going to be some of the bigger events that the markets are looking at. This doesn't cover everything, that's mostly US focused. So if you want to have a better understanding of what's happening on the dollar, then obviously you want to look at this, right? Again, we're heading into silly season, we're heading into Black Fridays. And that's a great segue into our Black Friday as Globex 360. We are going to be launching some really amazing things for Black Friday. So again, you're in the perfect place to benefit and have all of those advantages as we give away some of those specials. But in essence, stock market rally is meeting retail traders. And again, we're obviously going to be focusing on some of these earnings reports. We have Walmart, Target, and Home Depot, right, is essentially giving us their third quarter financials this week as well. So we will be looking at scheduling a trade-a-thon to basically go through their data points. Now we are going to get these numbers, and this is for the third quarter, and this has no impact on Black Friday and these expected sales that we get at the end of the year as we obviously move into silly season. So we will be dealing with them a little bit different from the tech stuff we usually cover in terms of our trade-a-thons, but I think it could be interesting to have a look at what these companies have to offer. And they're still big companies, right? Still with massive valuations, can affect S&P 500, can affect US 30 as well. Not necessarily as much on the NASDAQ, but there can be a knock-on effect as stock markets, as we've seen in the past, right? There is definitely that correlation that moves together. Now, quickly having a look at the S&P 500 heat map before we jump into those fundamentals, and we can pretty much see here that we've had, as expected, we've had this massive bull market in everything outside of healthcare. Healthcare has taken massive hits. This is obviously due to some of those midterms. We will be discussing those midterms more in the dollars for lunch session and what that means for healthcare and what that means for potential future stocks that we can look at getting into long or short, right? But across the board, markets have seen massive boosts, right? Amazon up 4.3%, Tesla up 2.75%, which is obviously a great change to see as we've obviously been in this massive bear structure up and until now. Now, from the economic calendar standpoint, for today, we are flying in a fairly fresh climate. There's nothing too serious that we need to worry about for today. Markets are fairly open and uneventful for the course of the day, right? You can see no high impact news in our radar. So today is going to be the perfect day to spend a lot more time on price action. Now, we do have some fundamental data for Tuesday, Wednesday, and Thursday with not much to say for Friday. Tuesday, Wednesday being the two biggest fundamental days. We are going to be utilizing some of that fundamental data, and we are going to get London session data. We are going to get dollar session data. So again, no matter where in which session you end up falling, we're going to have some big trade opportunities. But obviously, a lot of our bigger opportunities are going to happen in our dollars for lunch session. Now, if you're joining us for the very first time and you want to understand what is dollars for lunch, what is premium, what is free, well, if you're watching me now, this is our free broadcast that is public. It's available to anyone and everyone. And our dollars for lunch falls as part of our premium and premium plus setup. So our new categories are going to be launched this week. But ultimately, that means that our premium sessions are for Globex 360 live account holders with a minimum of at least $100. If you'd like to be a part of that, you'd like to be part of this afternoon's trading session as we trade the US Open and New York Stock Exchange Open, you definitely want to be a part of that. So for today, fundamentals, fairly clean sailing, and it's a perfect time for us, as I said earlier, to focus on some of those bigger price action items because there's a lot to be talked about there, right? We're seeing a lot of opportunity from a price action perspective. I think without further ado, that's exactly where we are going to jump in. So we're going to transition from our news and we're going to get straight into some of our analysis, and we're going to be looking at FX, we'll be looking at indices, we're also going to be looking at commodities and crypto. So we're going to start off this morning having a look at the FX side. And again, as always, there's no better place to start than having a look at that dollar index and what a thump it took from the CPI data on Friday. And I will explain this in a little bit more detail, so let's jump straight into it. Beautiful stuff. So in front of me, we currently are looking at the dollar index. Now, for those of you who are part and parcel of our event on Thursday, obviously we broke down and understood that the CPI numbers were bad for the dollar, good for every other instance where, the dollar is not the base currency setup. So everything with the dollar was a quote currency. We saw those currencies and instruments and commodities rally and rise. And this is obviously because lower than expected CPI numbers mean essentially that's bad for the dollar near term, but more importantly, why stock markets have rallied so hard on this is that there's now the hope that inflation is starting to have peaked, right? Meaning that the next Fed reserve rate, that Powell will come in, these economic policies may be a little less strict. And I think the markets took that information as a positive sign. They took it as an olive branch that there is better times ahead. Markets have really rallied off of this, and we can see the extent of how triggered and loaded the markets are right now based on all this massive dollar growth, right? And the part behind me, this is the dollar index. We can see how loaded dollar's been pretty much for the balance of this year, right? From the first month of this year, we've just seen the dollar actually dominating everything in its class, and that CPI data has been the first I would say the first fizzle that has gone away into that rock and caused a major crack in this bear and bull market structure rather on the dollar, right? So we looked at that move over there, and going down to an hour, you can see literally the moment that CPI data come out, right, we've got this massive sell-off dollar. Now linking that up into currency, and what does that mean for currency? We're going to be having a look at the Euro USD. This is currently the Euro USD in its little bull rally, based again off of that CPI data and the rally that it obviously had there. Euro USD was trading under market structure at the point of release of that CPI data release. We can see we traded Euro USD, we traded US30, we also traded, I didn't get a trade in on gold, but we did do a setup on gold. Euro USD absolutely dominated towards that top side, right? Activated our pending orders, which we set up as part of our Premium Plus session with clients that had more than $100 in their account. We had a separate session prior to the public session where I helped set up some of these orders. And these were one of the orders that we set up in that session. Markets took off, and for currency to move, 300-400 pips is massive, right? Those are the type of numbers we usually speak about when we talk about indices. For currency to rally in that way is obviously massive, right? At the moment, just on this particular trade, I'm currently running in the region of, let's see there, about almost $6,500 on that single trade, a single position on Euro USD, running at $6,500. Like I said, run about 400 pips peak. We are currently sitting right now at 394 pips, or otherwise 3,900 points to the top side. Now, I've been getting a lot of questions since Thursday. Is it too late to enter? Well, this is the reality, right? Markets have rallied across the board. People want to add on buys, people want to add on to the trades. But the reality is you need to find where that next pullback is going to be. And that's what we're looking for today and tomorrow. If we get some sort of pullback, where could we re-enter? Where could we continue that long trade position. Now, NASDAQ is showing a really clean entry. US30 is showing a really clean entry. So that is where we're going to transition to after we have a look at USD ZAR. There's also something pretty interesting there we might be able to take advantage of. So this is currently looking at USD ZAR this morning. I'm currently sitting on a 1 hour time frame. And USD ZAR, as we can see, is broken structure on that weaker dollar, right? When USD ZAR falls, it means that the rand is becoming stronger or the dollar is becoming weaker, or a combination of the two. Now, looking at USD ZAR, we don't have a clean pullback entry because, as we can see here on 4 hours, we've broken out of this bear market structure. The exact point of breaking out, right, was sitting at around about, let's just zoom in there, let's quickly, right, was also sitting on that CPI release, like dead straight. USD ZAR moved from 17 Rand 82 to pretty much 17 Rand 22, right? So we saw well over 60 cents lost there. When I say lost against the dollar, lost against the rand is definitely stronger. So if you're looking at moving money into the dollar right now, this is a best case scenario, right? So if you're funding a $100 account, if you're paying using less South African rand to get more dollars, because the South African rand is stronger right now due to these currency issues, right? If the dollar continues to lose strength against all currencies across the board, then that will continue to get better. But ultimately, if we're drawing in dollars right now, it's not ideal. But if you're buying dollars right now, that is ideal because the South African rand is quite strong. Now, in terms of an entry point here on where we could potentially start to look for long positions, we're going to be focusing and utilizing our last levels below us, right? Now, if we start to adjust our sight here, we were looking at this market structure. And when we look at support versus resistance, right, it's important to understand there are multiple levels we need to consider, right? There's a higher level, lower level, a deeper level, so on and so forth. So what we need to start to look for then is we need to start adjusting our view to try and understand, can we accommodate for this lower push? And is there a world in which this lower push here also sits on supports, right? I don't like this particular level floating in the air, even though we do have a decent amount of price action in this area that could serve as support. I would like a deeper push to the 61.8, right? The 61.8 fib level is currently sitting at 16 Rand 96 cents and 29 pips to the dollar, right? So that's ideally where I'd be looking at an entry. So I'm not looking at anything right now. Another thing we can also potentially do here is we can map out this price action. It is a little bit dodgy, right? It's a little bit thin of a market to, I would say, bank on, right? But we will be able to identify some sort of channel that's going to be moving towards the downside that may create a break. And I would then utilize something like this to look for that potential breakout. So that's what you want to do. You want to monitor, just put in some alerts, just slightly higher up. I would say that 17 Rand 60 to the dollar could be a good breakout point, but just also consider the fact we need to get back above that previous breaking point, right? That previous breaking point was 17.72. So we need to overcome that previous high. Otherwise, we are still lower highs, lower lows, and it means that next move could be a lower low. So just a little bit of information there that I'd like you guys all to pay attention to. Now, moving into indices, right? US30, NASDAQ, opportunities are there for us. It's just about mapping that price action and seeing where those pullbacks are and where we can find value. NASDAQ is a little bit straightforward. It's a lot more straightforward than US30. We are going to start with US30 this morning, looking for those entry points and how we can potentially get into that. So this is currently US30. I'm looking at it on a 4-hour time frame, just to give you a bigger perspective of where we are in the bigger picture of things. And as you can see here, bear market structure, first 6 months of this year, an attempted breakout, a deep retest, past lower lows, right? And now this new rally, right? Just bear in mind, we have not made a higher high. So this market has not confirmed yet as a bull market because we still have lower lows and we still have lower highs. I do believe that the CPI data from last week is enough to fuel this market, and investors are feeling bullish enough that this is some sort of market bottom. We could see a continuation to the top side. However, there's a big however with this one, right? Our next level of support from a pullback perspective sits in this region below us, right? So this is a view of our CPI release area, right? We had buy stop, sell stops. My buy stop activated, and as soon as that first little pullback ended up happening, closed out for around about $17,000, if I'm not mistaken, right? So very, very quick move. but massive trade regardless, because obviously indices moved quite substantially. Now, I do believe we could make a pullback to this 23.6 and continue with market structure. And this is where I would consider getting long. If indice markets want to continue rallying, then I'm not looking at continuing to buy in mid-air. I'm looking for that deeper pullback to a value proposition around that 23.6. That 23.6 is located on my support at the 33,195, right? 33,195. And again, remember, if you're using a different broker, these prices may be different. Your mileage may vary, right? You want to be in the same place, same data, same result. No better place to be other than Globex 360. There shouldn't even be another option, but there is, and that's insane. I don't even know why, but it is the case, right? So for US30, I'm looking for that pullback, and that's where I'll end up going long. For the start of this London session, just moving down to a 1 minute time frame, I just want to show you guys something really quickly. Start of the London session, right? We are failing to get any higher here, right? In terms of these three highs here towards the sideways. This is 1 minute time frame looking at and from the 11th at about 11 in the morning, right? 11 in the morning, we on a 1 minute time frame, we made these three highs here, or these three attempts to break higher, we failed at. If we don't break through on the London session, it's very likely we're going to start to see a deeper pullback on US30 as we start to move towards a potential move to the 23.6. Like I said, located 33,001, let's say 33,200 is the general zone. You want to just go ahead and on a 1 hour at least, just map out this rising structure, and you'll find where that point will intercept. It'll be the same as the third level, right? You also go to the left and have a look at what's happening on that side of things. Now, moving into NASDAQ, because this is where there is some cleaner entries that we could potentially have a look at. I've cleaned up my charts. This is a 4 hour time frame that we're sitting behind us. And I just wanted to pay attention to where we are right now, right? I just want you to look at that zone there. I'm going to zoom in onto a 1 hour. And I want you to see that we have a lot more support below us, right? We've cleared some of those previous highs, right? And we are in a position that we could potentially see NASDAQ take off. However, NASDAQ is going to have a bit of headwind, right? The big headwind is obviously going to be last week's tech issues, right? We had Facebook laying off 11,000 people. We've obviously got, and that's obviously Meta and all the subsidiaries. We had some bad tech earnings. We obviously also heard about the takeover from Twitter, from Elon, but obviously Twitter has gone private and it does not affect the tech market. However, even though it's not on the US30 on NASDAQ, there is going to be lingering effects, right? Because if you look at a company the size of Twitter, if Elon's coming in and saying this company has been growing, but there's rotten roots, signals to the rest of the industry that there's big problems, right? If we look at what happened, and we're going to look at Bitcoin in a second, what happened with that FTX liquidity issue, and ultimately meaning they might likely file for liquidation, even though that falls into the financial segment, most of these platforms consider themselves technology, right? So if we see all this bad data, this creates a negative sentiment, which is headwind for the growth of NASDAQ. So that is why we just need to be a little bit cautious here. Even though from a price action perspective, NASDAQ seems to be sitting in a great position for some sort of takeoff to the top side. Just to zoom in and give you guys a little bit more details here, my support for NASDAQ is reading in line with this little market structure that we're seeing. That's 1 hour. So I'm looking at a NASDAQ long at the 11,700 mark, and we'll get a bit more detail in a 15-minute over where exactly that will end up being. So that's going to be the structure that I'm playing for today, and it might very well materialize before the New York Stock Exchange. However, I would like the New York Stock Exchange to open during our dollars for lunch session. I'd like to see where the volume pours in. If we start to see some volume and optimism in NASDAQ toward that top side or long position, that would give me the confidence that the market's volume and the market's belief is a continuation of the negative CPI data, lower dollar, and the high performing stock market and Wall Street as a whole. So that's going to be one of the key trigger points for me, is looking at the New York Stock Exchange open, but definitely huge potential to the top side. Inversely and oppositely, right, if we start to get breaks on these massive bull runs, what does that mean? It means that we are in retracement territory, right? Everything that goes up must come down, everything that goes down must come up, right? It's not just pure gravity. Whenever there's a big move, right, those big moves need to correct, right? Big moves need to come to some sort of level of correction, right? That is what a recession is. We're busy heading into a global recession, regardless of which country you're sitting in. The US is in a recession, regardless of how they want to call it. that ripple effect comes into all countries. As we read last week, South Africa should start to see the worst effect of the economic climate and all these high interest rates in 4 to 6 months from now, right? Why are we in a recession? Is it a bad thing? Yes or no? Technically, no, right? Recessionary periods are something that happens all so often. In a climate and economy, when a country grows for an extended period of amount of time, there's a period of stagflation. Things have to correct and things need to go back to normal. So normal is not just continuous growth. Normal is impulses to the top side and corrections, impulses, and the same is true for life and every other area that you look at. So that's what we're going to essentially look at. If we break through, I would say more than likely, if we break through that 11,557 on NASDAQ, that is where we're going to start to look for those deeper shorts. So the other thing also to note, guys, and also something to take care of, is that when we look at past recessions, right, stock markets have performed exceptionally well when the rest of the world is in trouble, right? If we look at the coronavirus outbreak, we look at all those issues. Yes, there was a temporary net negative on markets around the world, and you couldn't hide from that, right? Even gold, safe haven indices, safe haven instruments were also affected. However, if you look over a period of time, look at South Africa as an example, right? Businesses are still recovering from the coronavirus pandemic and the lockdown, right? This is now we're sitting almost 2 years later. So these recovery processes take forever. Wall Street and the stock market recovered in the space of 3 months, right? One of the biggest recoveries we've ever seen. And that's because of how interconnected things are, how globalized our world and economies are, is that, these things tend to happen and then move on. So I think what we've seen already from an indice perspective, this 6 months of this year, we've seen that sell-off on NASDAQ, we've seen a sell-off on US 30, S&P 500, German 30 as well. I think that was the worst of the recession that we're going to see from a stock market perspective. And that is why, if we have a look at investing opportunities, and personally speaking, this is obviously not for financial advice in any way, shape, or form. This is purely for entertainment and educational purposes. The stock markets have outperformed every bad crisis that has been out there, with the exception of the 2007-2008 housing crisis, where Lehman Brothers collapsed, and that obviously took the market with them. I don't think we're going to see a similar thing, right? So I'm definitely looking at longs, and just that's to answer Chris H's question. So Dane, when you said long, are you meaning the downside? Sound bad. Is the sound bad, or you can't hear it correctly? So we talk about long, we're talking about buying. We talk about a short, we're talking about selling. Okay, just so we're on the same page there. All right, now moving away from indices, let's quickly have a look at what is happening on commodities, right? Again, last week for the CPI data release, we explained that if we get a lower than expected reading with a good amount of standard deviation, dollar will suffer, and that'll give commodities the break they need to start getting long. Now, this is obviously massive for the price of gold, right? Gold is pretty much being held up and floating around this $1,687 ounce, temporarily lower, right, as we saw last week, which is obviously a pretty worrying sign. But gold has come into its own now. Now we have approached our first resistance level, our first major resistance level, and we can see the effects of that resistance level as we start to look at that 50 fib level. Our resistance on my charts currently sits at $1,762 per ounce of gold. Now, all we have to do here in order to be able to trade this into a very simple trading structure, and I'll show this to you guys in a second, is if we drop down to 15 minutes, we're going to see two structures. We're going to see a rising structure and a falling structure, right? This rising structure has lost momentum. We had a little bit of a fall, but we can see now it's starting to gain momentum to the top side. So how does one trade this, right? Because it doesn't seem to have any clear cut resistance / support or breakouts. Super simple, right? So the second that price breaks this resistance level, so the second gold goes over that $1,771 and creates a new high, right? That is enough that the markets need in order to have considered breakthrough of resistance, right? And that'll fuel a rally on gold as the rest of the world and all this external economic data pours in, right? Gold still remains a safe haven currency, even though it has not performed in that manner. But again, a weaker dollar, stronger gold prices. Now, those correlations aren't always there. We're starting to see them come back in the season. And again, if you're a trader in this market, you're seeing trading opportunities unlike anything we've ever seen before. If you can learn to trade and at least be consistently profitable, and I don't care if that consistency is $1 or $2 or 10 cents, if you can consistently enter and exit a market over the space of that week, you can be net positive in this climate. I'm telling you, you have an amazing future in the markets. There's no doubt about it. How we make money is shifting, it is changing, right? Money is made using our minds, not necessarily our hands anymore, right? It's using our brains. So again, if you can learn how to trade in these markets, be consistent, then you are set for an amazing future in this particular space. Last and not least, we are going to look at Brent quickly. And Brent, didn't have as much of a bull run as we would have liked to have expected, looking at that weaker dollar. Just shifting over to a 30-minute time frame, having a look at when we got that data from last week. We received the CPI data on the 10th, right? The Brent price has rallied over that period of time, and if you caught that as a Brent buy or sell, you should be smiling. But we still are facing a fundamental resistance level on the price of Brent, right? So you guys remember that key level for me is that $98 per barrel, right? As we discussed in previous shows and previous broadcasts, that $98 per barrel is still above us. And in addition to that, the more worrying thing than that is this long-term diagonal. What once was resistance and held Brent up for the past 6 months is going to be our main factor that we need to overcome towards the top side. So for Brent, I'm not looking at anything here until we start to get over that $98. Once we get over that and we above resistance and now have a new support, and we're clearly then in the momentum of making those high highs. Now, Brent is definitely something we want to watch out for, because again, we could see Brent return to that $123 a barrel type level. Now, just to give you an idea of what that could mean, right, from a standard lot perspective, if we look at Brent moving up to $123 per barrel, right, and a standard lot, listen to this, a standard lot of Brent moving up to $122, $123 per barrel, one lot of Brent would result in a TP of over $24,000, right? That's how many pips are involved in that rise to the top. $24,000, you can round off with the current exchange rate to be plus minus, 370,000 Rand, right? So just over a third of $1,000,000 on a single trade, one lot. Obviously, you need a bigger account to be able to take that, but that is the opportunities that can present itself. Now, again, last item I want to speak about today is going to be Bitcoin, right? Bitcoin had a massive failure, and it couldn't have happened at a worse time, right? This is an announcement that FTX is obviously pretty much in trouble, right? There was an opportunity for another firm to buy them out. They did a bit of an audit there, found out that the problems were much bigger than what it seemed on the surface, right? There's accusations of mismanagement of spending, investing clients' funds, so on and so forth. Just a ton of issues that are non-transparent, and ultimately means that what they said they had in value, they no longer had. And this could result in hundreds of millions, if not billions, being wiped off of the market in a dollar value perspective, just if they are liquidated or they file for bankruptcy. So this obviously couldn't come at a worse time. Bitcoin was waiting for that price of the dollar to weaken so we could see that skyrocket, right? Well positioned off of those lows. It's currently looking at a 4-hour time frame. Well positioned, breaking out of this long-term bear cycle to start edging onto those $22,000, $23,000, $24,000 per coin. And then we got that news of what happened, right? And this just goes to show you that you never trade without a stop loss. No matter if the fundamentals are in your favor, it doesn't matter if everything is in your favor. The whole world is pointing towards one direction. As an example, Bitcoin should have rallied, right? It is so sad and so unfortunate that news timing came out so close to that CPI data release, because this was Bitcoin's game, right? This was Bitcoin's time to shine. And I think the crypto community as a whole is shook because of what has happened. So Bitcoin has a tough time ahead to obviously improve their systems, improve their transparency. And I think mostly for exchanges to improve that transparency and that relationship and trust with clients. It's not the underlying technology that's a problem, but in this particular case, it's the exchange that was not transparent and wasn't really, was not conducting their business in the most ethical of manners, right? And that has unfortunately had a big hit on the industry as a whole. So a lot of opportunities this week, mostly driven around price action. What we're going to be doing this week is we're looking for supports, we're looking for resistances, and again, stay with us, because in Dollars for Lunch, do expect we will see market movements that we can potentially either get long or short on indices. We might be in a position to start catching some gold trades, as well as look for some other opportunities that exist in the market. Dollars for lunch, I will be taking analysis requests. So in the show, you can put in your pair in your instruments, and I will then have a look at trying to analyze that. I will take your requests. We'll look at 4 or 5 charts, analyze, and if we see something good there, we might end up taking those trades together. So just having a look at indices. Indices are currently attempting that breakout, right? Last switch, last look, last view before we end this broadcast, right? We are seeing that US 30 is trying to get outside of this current zone, right? A little bit of a peak, a little bit of a breakout there for this London session, showing us there is some volume still in this market towards the top side. So I'm going to put in a feeler trade, and I'm going to go long on this one. And all I'm going to end up doing here is just placing my stop loss below this previous market structure. So a feeler trade just means you need to have enough room in this trade in order for it to breathe. And I'm looking going below this market structure so this trade can breathe and ultimately then decide if it's going to be a breakout or not. So if we receive a pullback, I might look for a re-entry here. But I think this will be a lot more mature and ready as we get into the the US, as well as the New York Stock Exchange open this afternoon. Remember, dollars for lunch this afternoon is going to be at 2:45. We're going to trade the US open as well as trade the New York Stock Exchange open. So if you want to be a part of that, make sure you jump in with us, and we're going to have a ton of fun. Again, for every single one of you that is new to trading, put your hands up, let us know. You can go down in the link below, open up your Globex 360 live account. Down below is also the Telegram link to the Telegram group. You can jump in, be with us, be a part of the process. And again, like I said, dollars for lunch is going to be big this week. I will be in dollars for lunch announcing what broadcasts, what shows we're going to be having for the balance of the week, as well as some special trade-a-thons as we look at capitalizing some of those earnings reports for Q3. Other than that, guys, as always, you know the drill. Always trade safe, be safe. As always, remember to do things the Globex 360 way. And I'll see you guys all a bit later this afternoon. Until then,